We'll start, Tyler, just with the general state of affairs on Wall Street right now and what you're seeing in front of you.
Well, naturally, the CEOs and boards that we've talked to so far this year have been cautious given the economic backdrop and specific issues like the debt ceiling. I think we're carefully optimistic about progress that was made over this weekend and more work that needs to be done in order to settle markets down and rationality to prevail. I think as we look to the second half of the year, we're cautiously optimistic that activity will pick up off the back of that confidence.
So that's good news, right? But we've been hearing, and Sonali has been talking about, this massive avalanche of issuance that we could see from Treasury. The concern is if we see, $1 trillion in T-bills in the next 3 months, that could hit liquidity hard. Do you feel that, or are you worried about that?
Sure, we're watching that. And at Citi, we're looking at all contingencies for whatever the economic backdrop that presents itself. We could see a hard landing, but I think when we work our way through it, we're starting to see green shoots and signs that we might actually see a Goldilocks or soft landing dynamic. There's no doubt there'll be some volatility and some tightening of credit based on actions and activities that have already taken place this year. But as we really look forward and look towards what we think can be a more optimistic picture of 24 and 25, the likelihood of activity levels or the potential for that to happen in the second half of the year gets us a bit more excited than we were going into the end of the first quarter.
Even if things come back, do they come back to where they were before things started to go south? I mean, you see kind of that picture of showing up in the layoffs that have now on multiple banks happened once, twice, maybe 3 times in certain places.
Yeah, I think the banks are doing what they should in order to right-size their teams for the complicated environment we're in. I think as Citi has mentioned publicly, we're taking that tact, which is we want to right-size the opportunity set against what we see. Now, we've got an outstanding pipeline, and Citi's model is a universal integrated model so that we can help with corporate banking, investment banking, capital markets, and advisory. And given that diversity of opportunities, we're actually seeing some of our clients be quite active. If you think of large multinational corporates doing a lot to manage their risk, doing a lot to do things in the investment grade market, such as debt issuance, we'll see a pickup in that. We've started to see some green shoots in leverage finance. We think deal activity could start to present itself. We've even seen the equity capital markets come back to life. I think the thing that excites me most is we're getting to a point where I think some of the conservatism that we've seen in M&A could now produce action. And I think if you look at the activity, the first quarter was quite quiet. If you look at the second quarter of activity for M&A, we've seen a big increase. And so we're now at the $1 trillion mark of announced M&A. That's in line with averages over a longer cycle, not nearly as good as the peak activities we've seen recently, but we think that's a start.
Now, those are the green shoots, not to mention some of the risks that are still under the surface. I think there's a big question under the market of whether we'll see more of these banking issues resurface after a wave of failures we saw earlier. Is there a sense at Citigroup that this could be a reality?
I think we have to be prepared for all eventualities. I think we feel great at Citi that we're one of America's largest, most well-capitalized banks, and we think the actions that have been taken have stabilized the market opportunity. And as we look forward, obviously, there's more work to do, but I think our view is, again, that progress will prevail. It won't be perfect, and there will possibly be, additional bank closures. But from our perspective, we're hopeful that the balancing act continues.
Even without bank failures, there's a sense that consolidation could be possible. You have Citigroup that was working on, interestingly, an investment bank working on another investment bank deal, Mizuho buying Greenhill. What does that say about the ambitions in financial services for more consolidation?
I think consolidation's on the come. Obviously, there are a lot of changes in the marketplace. When you look at the winning banks, those banks are the universal banks right now, but business is cyclical. You're also seeing changes in the competitive landscape, not only in the domestic market with the regional banks having their own issues, but also international banks that compete for investment banking activities. And I think Citi, in our position, we feel like we have a unique opportunity to differentiate our brand and our capabilities in this environment, and we intend to do so.
One of the things we have to ask about is headcount. We saw the Wall Street Journal story on Goldman Sachs, and a number of banks have been, even if it's tactical, reducing headcount, cutting costs. What are you doing right now? Because I know that you've been looking at this in the past.
Sure. Well, we've
in
been
the recent
active.
past?
We've been active, and we are looking at our business as you would, which is supporting those businesses that are having strengths. In the banking arena, we're investing in commercial banking. We're protecting and investing in corporate banking. With the wallet deterioration in investment banking, we've been careful to continuously right-size the business. Now, importantly, we see this as an opportunity for Citi on occasion when there's a specific opportunity for us to add talent where we have gaps, we're doing that as well. And so we're going to be careful looking at the cycle, and the cycle outlook isn't perfect right now, but our view is we want to be positioned on the other side of this downturn to capture the true benefit of the upturn.
And Tyler, before we let you go, we were mentioning Elon Musk making the trip to China. That market, one that the market is really trying to figure out this year. Generally speaking, what's your view on the Chinese market and how it fits into the overall economic outlook?
Well, I promise to come back. I'm headed out to Asia in about a week or so I'll get my own, hands-on view of things. But we clearly have seen the China economy stand out as one of the engines of growth, or at least confidence in growth over the long run. They have their own series of issues that they're looking at. We live in a complicated world where geopolitics and the influence of really separating economies is front of mind with a lot of our clients. We're a global bank. We see a huge future in helping Chinese companies move into the international markets and looking at international companies do what they want to do in China, and that's what we're excited about. But we would say that we feel some optimism from those of the Citi team that have been in China, and that's why I'm headed that way next week.